Hey everybody, Brian Shannon here from alphatrends.net. It's Friday the 25th, and we had a mixed bag for the markets. Generally down. The oil was higher. That had a good week, but we'll talk about these markets in depth. Let's take a look here at this view from TradingView. And we have on here, of course, that indicator that is available to the subscribers to Alpha Trends and subscribers to Twitter. And this simply shows a better view of where we are in relation to the 5-day moving average. When we're below the declining 5-day moving average, we're guilty till proven innocent, and that's how it remains for the Russell 2000. The rest of the market's kind of mixed bag here, so let's take a closer look here on these charts. And here's the daily time frame on the left. On the right is the 30-minute time frame. You're going to see that these charts are already marked up because I'm redoing this video. The prior one had very low volume. I forgot to swing this microphone over. So anyways, here we are. We've got the markets, just less than 1% off all-time highs here. We are in a primary uptrend. We're above a rising 20-day moving average. That 20-day moving average is above a rising 50, 200, etc. When we are in a primary uptrend, I get cautious when we're below declining 5-day moving average. I do not get bearish. I do not look to sell short in this type of environment. Instead, I look at it and say, maybe this is the beginning of a bigger correction. Let's wait and let the market prove to me what it wants to do before I initiate new positions. And if I get stopped out of other positions, that's fine. That's me as a swing trader. My time frame is always that of a swing trader. If you're an investor, you've got to look at it and say, maybe your stops go up underneath the lows from back over here or one of these higher lows. But from a swing trader's perspective, we've kind of got a mixed message here in the market. Primary trend clearly higher. Intermediate term, we have a declining 5-day moving average. Now this morning, it gave us an interesting setup in that something I talk about often is when we gap above a declining 5-day moving average, it often leads to a bigger move higher. So in that case, we look to buy strength after that gap right here and then raise your stop up underneath these higher lows, or at a minimum, when the market gets back below the daily volume weighted average price and we have a declining 5-day moving average, that means book your profits, take a small loss, whatever it may mean, because the market is likely not ready to hold on to its gains. And that's exactly the case for the S&P 500. We're below the declining 5-day moving average, and it doesn't mean the market, I'm calling a top to the market. You're going to never hear me call a top, truthfully, and you're never going to hear me call a low. I'm interested in the sane trading when trends are aligned in between. Right now, we don't have that. So for the S&P 500, I kind of look at it as a mixed bag. Let's let it settle down and figure out what it wants to do. Taking a look at the NASDAQ, we've got a little bit better picture here in that on Wednesday, we had a shakeout below that rising 20-day moving average and also below the month-to-date anchor. So that put me on caution. I was thinking if we got stuck below the declining 5-day moving average, then I would want to see, if it comes down like this. Instead, it recovered. Was there a good trade opportunity in here? Well, I don't chase gaps. Instead, as you know, I wait for it to get back above the VWAP. And I didn't buy this one throughout the day because we were extended and then it failed to hold at the VWAP in here and closed near the low of the day. So heading into next week, what I'd like to see is maybe some consolidation in here and just some rebuilding. Right now, it's a mess. I feel no reason that I should go and look to trade the NASDAQ 100, the Qs. There's just no good setup there. So to me, it doesn't matter. When I see the market doing that, that is when we have mixed messages on different time frames in the market, you have to look at the overall environment we're in. We're in the middle of earnings season. We're coming up on election. I trade them all the same based on price action. But with all the earnings reports, that's where the opportunities are. And that's where, for instance, last week we spoke about Netflix and how it came down to the anchor from the August 5th low right here perfectly, prior to the earnings report, and then it bounced. And then what happened? Well, after that gap higher, there was a great opportunity to buy as it got back above the volume weighted average price from that gap there last Friday. So when we look at those different time frames, we're looking for trend alignment. And for the semiconductors, for instance, we've got a mixed message. This is what I'd like to see happen for the semiconductors. We've still got a primary uptrend. We've got a rising 20, 50, 200-day moving average. Nothing bearish about that. Intermediate term, all week I've been cautious. Today we gapped up and then we closed below the daily volume weighted average price. So I think we need rebuilding in there. The Russell 2000, this is what I've been talking about, is that, we've got the weekly chart that looks good. This is what I sketched out exactly 1 week ago. This is what I've been looking for, and we are not there yet. So I had sketched out some more drawings in the video I previously recorded here a couple hours ago. And what I was saying is, here's what I'd like to see. I'd like to see maybe we rally up on Monday. I would not chase that strength. And we couldn't trust today's strength because we have a declining 5-day moving average. I simply have low trust for rallies with a declining 5-day moving average. Now, what's going to change that? On Monday, we average this out, and then we will replace it. Hopefully, this is what I'd like to see, with something like this. Maybe we rally up to the top end of this range and then pull back, test the 5-day moving average. The 5-day moving average begins to flatten out on Tuesday, maybe Tuesday midday, maybe on Wednesday it makes a higher high above that flat to rising 5-day moving average, and I would want to be a buyer over here and set my stop underneath whatever's the most recent relevant higher low. If it's at 220, so I would buy it at 222 with a stop under 220. Risk 1% basically. And if it went down, well, then I would cut it. Because why? Because what I'm looking for as a trend trader is we've got an uptrend on the daily time frame, but shorter term, we're just starting to maybe turn more neutral here. If we see a higher high in the shorter term time frame, that means that, to me, it's likely we're going to be able to continue to move higher. Trend once established is more likely to continue than reverse. But if it does reverse, I've got to protect my assets. So that means I will look to see what is that most recent relevant higher low. And if it's right here at 220, I buy it at 222. If it breaks down and goes below 220, that's it. I'm out. No questions asked. Instead, what we'd like to see, ideally, of course, is that we break above that 222 level, and then we do something along the lines of this. We do show some higher highs and higher lows. That's the way they typically go. 5-day moving average rallies up under it, and we'll let the market tell us when to get out, just like it told us that if you were long from last week, you should have gotten out right here. We had that rally that began last week. I didn't participate in it, but it showed a beautiful pattern of higher highs and higher lows. Well, that pattern of higher lows got interrupted right here. So if you bought over here, that should have been your exit. There was no reason to continue to hold. There's no reason to buy the dip. You buy strength after the dip. I will have that written on my headstone, I think. Buy strength after the dip. Or if I die early, it might say he bought the dip. Either way, you look at this and it's just no reason to act yet. Don't feel compelled to get involved unless price action tells you to. Yesterday, we saw Tesla report earnings. Prior to earnings, it came right down to the anchor from this April low. I didn't buy there. I pointed that out and said in advance, I'm not an earnings gambler. If you are an earnings gambler, it was a tremendous trade. But you didn't have to gamble on the earnings. Here's what I'm talking about. If you look at the shorter term time frame, what did we have? We had a gap up. It recovered back above the daily volume weighted average price. I pointed this out to Alpha Trend subscribers, and your purchase here with the risk right there, just perfect. It was in this morning. If we put on pre-market, you can see that it came down precisely to what I want to do is look for. Let me pause this. Here's what we're looking for. Today's pre-market action, it came right down perfect to yesterday's VWAP, and the buyers took control there, and they maintained control as it made new highs throughout the day. And now, it's getting a little bit extended, of course. So do you want to buy it here? That's up to you. The point is the opportunities are out there. The opportunities were there in VKTX. VKTX was a perfect one. It broke out yesterday. If we look at this on a 2-minute time frame, for instance, that we can see you don't have to be involved the day before. Instead, chase the gap? No. Wait for it to shake out, get back above the VWAP. This is a specific strategy outlined in great detail in my Anchored VWAP book. Buy here with a stop under there. If you miss that buy, don't chase it. Don't buy the touch of the VWAP. buy strength after it rallies away from there. So buy here with a stop under there. What about today's action? Today, we saw a continuation of the upside. And here's how it happened. It gapped up. Do you chase that gap? No. You wait for it to shake out a little bit, buy as it gets back above the volume weighted average price. And I was showing this to subscribers. What if you're an options trader? What if you're one of those people who decided, hey, I'm going to buy the 74 calls? Well, the 74 calls right here at this point were trading for $1.38, $1.65. They went to $6.50. That's not my style of trading, but maybe that's your style of trading. The opportunities are out there, and the difference between the way most people trade and the way that I like to teach people is that you have strategies, you have discipline for this. Let's talk about the biotechs. Are these a purchase right here? People have been, asking me, hey, Brian, should we buy them? No, it's not time to buy them. What's the direction of the 5-day moving average? The direction of the 5-day moving average is lower. When is that going to change? First thing Monday morning, the first hour and a half, we get rid of this data. If the market rallies like this, then the 5-day moving average is going to flatten out. So I'd like to see something along the lines of this if it's going to recover. I think it probably needs a day or so to absorb this big volatility here, and this is big volatility. So the risk is that it doesn't do that in the next couple of days, instead declines down to the 200-day moving average and the year-to-date anchor. There's no reason to be involved yet. Wait for it to play out. When you wait for it to play out, sometimes you miss a trade. But guess what? They set up again. There's so many stocks, liquid stocks out there that you can trade. You don't have to catch every single one of them. And these are things I've been teaching to people for decades and written about in my books. Let's take a look at the financial stocks. These guys also, they had a beautiful pattern here. Higher highs and higher lows on this shorter term time frame. When that pattern breaks right here, it means hit the exit button, eject. Time to move to the sidelines. We're up a lot. So now where are we? Well, we broke those higher lows here, and now we've been stuck below the declining 5-day moving average, and there's no reason to continue to hold it down in here if you're a swing trader. If you're a longer term investor, you probably shouldn't even be listening to me, truthfully. Energy names, I've been down on for quite a while. I'm starting to get a little bit more interested in them. If you take a look at the anchor off of the high from this year, you can see we're trapped just below that. We're also trapped just below the anchor from this recent high. So let's put that on the 30-minute time frame. So it's still early in here on these energy names. But on this daily time frame, you can see we've got the 20-day moving average, the 200-day moving average, the 50-day moving average, and the year-to-date anchor. So ideally, we want to see this market continue to build support in here. And if it can do something like this, maybe even Monday, rally up to the anchor from that peak, I wouldn't get excited. People will get excited and chase it right here. And then what's most likely to happen, it would most likely pull back as it hits the anchor off the peak in the month-to-date anchor. And then how it behaves after that, if it gets rejected there, builds a higher low, and then gets going, I think that's when you want to own energy names. I personally don't trade energy names, so I have no interest in them. Let's take a look at crypto. Here, let's take a look. We'll start out, of course, with Bitcoin, the king daddy of them. And, a couple weeks ago, I said this is what we were looking for. That rally, pull back, and I was going to get aggressive here. Well, I did get aggressive there. I went 100% in. I've been holding. I sold a little bit on, I think it was Wednesday, and I used that money to buy some Litecoin. We'll talk about that in a minute. We're just looking like we're starting to turn sideways a little bit. We do have a short-term pattern here of this shakeout low and a higher low. So it's not about what I do with my money in the market. It's about how you use this analysis to say, does it make sense? Should I maybe sell part of my position if it breaks below here? Because if it breaks below here, that's this low, then maybe it's going to come all the way down in here, similar to what Ethereum did. And if you remember, we spoke about Ethereum. I said, I don't like this one as much, and that this breakout from this failed move came a fast move lower. Now Ethereum is broken. So doesn't mean I'm predicting that to happen with Bitcoin, but you probably want to protect yourself and lock in partial gains in case it does that. Because if I don't lock in some gains and I ride it all the way back down to where I purchased it or even lower after a 10% rally, I feel pretty stupid about it, and I think you should too. If you're a trader. Solana, we bought this one Same story. I mentioned this one. I bought a little at 153. I bought the rest at 159 and change. We spoke about this inverted head and shoulders pattern that it's 160. Down here is 125. The height of that is 35 points. Add 35 points to the breakout, gives us an implied upward measured move of 195. I bought it at an average of, I guess, 157, let's call it. Am I waiting for 195 to sell? Not a chance. I'm looking at this and saying, wait a minute, we have this beautiful pattern. We have these higher highs and we have these higher lows. Are we in jeopardy of breaking down? If we make a lower high and then break below here, I think it's time to eject, at least on partial, and look to recover what you're getting involved in. By the way, the X subscription, I've been getting fantastic feedback on it. I'm giving so much value there with webinars, daily videos. Take a look. It's $10 a month. And anyways, have a good weekend.